name is Brian Coester. I'm CEO of Real Estate Connection.
Yeah, my name is Adam Sullivan. I'm a Senior Strategic Relationship Manager here at Zillow Group.
This is a part of our Pivot to Purchase series that we've done, and we've done multiple webinars together to discuss really the purchase business and how 2022 is really going to be the year of the purchases, and there's going to be a lot of great things happening.
Now, the mortgage first consumer, which is a growing segment of consumers, and I'll dive in this a little bit later, but a good 37% of today's buyers are millennials. I don't have the stats on the Gen Zs, but I mean, that's a growing base as well. They're coming into the space never owning a house. And if you've never owned a house, you clearly have never had a mortgage, and you probably don't know what that process looks like. And it's a very painful, scary process that they're envisioning. And so instead of wanting to see the house right away, they don't necessarily want to talk to the real estate agent at that point. They want to talk to a loan officer, because the loan officer, quite frankly, and I'll say this a little bit later, is the best mortgage calculator out there. They can tailor the financing to what that consumer can qualify for. If it's using gift funds for a down payment or other nuances that go on with their qualifications.
That's right. That's right. And so that's interesting because, we see that as well with our buyers, both on the real estate side and the mortgage side, in the sense that when they're starting, they kind of know they need a pre-qualification. They have no clue about what the process is and, what programs are available. Maybe they heard something from a friend, maybe they were referred. They're going online, to start that process and start that research. But then they really end up in that, sort of one-on-one with the loan officer and the realtor to get to the nitty-gritty. And without, and you can have the best technology in the world, but it really does still become that one-on-one conversation where they want to understand the mortgage process. They want to understand what they qualify for, what down payment assistance programs are available, or what outside agency products they're available for them. And they're looking for that kind of complete handheld walkthrough from the LO. I know you have a presentation and stuff you want to go through, so maybe you want to pivot right into that. Then I have some stuff. We'll take some questions, and then we'll rock and roll.
Sounds great.
All right.
So let's see here. There we go. All right. So we've already kind of primed this a little bit for the audience, but the way I've kind of approach business models now is you either have a static model where you don't really have much change, like it stays pretty even keel. You have an established business model, you're comfortable with it, it's paying the bills, it's good, right? And then you have a hybrid model, right? And it's one that adapts to the overall marketplace. And that's key, because the marketplace is going to be that constant variable that's going to evolve. We've seen that over the past 2 decades with the infusion of technology, online resources, really driving consumer behavior and what they want. So to really illustrate this, I'm going to tell the story of 3 companies that everyone on this webinar probably knows very well. This first one is very personal to me because Blockbuster, when I was a kid, is a Friday tradition. I remember getting out of school, and as long as I had good behavior, my dad would take me over to Blockbuster, and I'd cross fingers that they'd have my Nintendo games that just came in. Yeah. Or there'd be the movie that just came out, and there's nothing more painful than scrolling through and all of a sudden it's like all gone. But if everything went right, you got the video game, you got the movies, you got the candy, right? It was perfect. And Blockbuster knew that at the time in the 80s and 90s. And they did so well to where they basically became the gold standard for brick and mortar. And at their peak, they had 9,000 stores, had about $6 billion in annual revenue. And back in 1989, they were opening a new location once every 17 hours. So quite frankly, they were perceived on a rocket ship and have very strong foundation. Starbucks, very similar in the fact that it's a well-established brick and mortar business, been around for almost half a century. And if someone's thinking about coffee, Starbucks is probably crossing their mind. And their business model at the time is they wanted Starbucks available to everybody at multiple locations. And out here in Seattle, I can throw a rock any direction and probably hit 3 Starbucks. And so they, quite frankly, didn't have to change either, right? I mean, they already had a loyal customer base. They had stores everywhere, very profitable. They had brand recognition. You'd think they'd be set. And then you have Peloton, which is by far my favorite thing on a workout standpoint. I have a Peloton. I'll be the first to say it. I love this thing. This thing is coming so handy during COVID. And what I love what Peloton did is when they built their first studio, instead of going down the route and having studios in every city and getting people to show up with their memberships to ride a bike, they're like, we have a bigger total addressable market if we get these bikes into everyone's houses. And my understanding is they don't make that much money on the sale of the bike. Where they're making their money is on membership and apparel. And the fact that they've addressed a larger addressable market versus just having brick and mortar and studios everywhere, they had a competitive advantage right out the gate. Now, fast forward, Blockbuster, one location in Bend, Oregon. I haven't been there yet. I'm going to be down in Bend probably this summer. And if it is still operational, which I hope it is, I'm going to have my kids relive what I went through. And we're going to get the video games, we're going to get the candy, we're going to get the movies, because I like that nostalgic feel. But over the past 2 decades, a lot of tech was infused, a lot of convenience was infused with the fact that you can go online for movies, you can go online for games, you can order your stuff off Amazon for candy, right? And consumer behavior changed, right? They wanted more convenience versus driving to a Blockbuster. So they went from their peak right around early 2000s to now they're at one location. Starbucks, they could have just stayed their course on a static model. They had the consumers, they had the locations, they had the brand recognition. You'd think they wouldn't have to change. They basically had hit the pillar of success or the peak of success. But they looked at their consumer base and they noticed, hey, we have lines everywhere. And one thing that's more frustrating to consumers is lines when you're waiting for your first cup of coffee, right? So they created an online app, an online app. So basically it's going to store all your favorite orders. And before COVID happened, this thing was so convenient. When I'd come into Zillow, there's a Starbucks right down the street from us. Every time I walk by, I got a text notification. Would you like your same order that you had yesterday? We already have funds in the account. I click yes. I walk in, grab it, never have to wait in line. So what did they do there? They basically eliminated the friction of the transaction. Consumer clicks a button, walks in, grabs what they want. They have complete control of when they're going to pick it up, and they leave. And this helped drive further revenue growth, even though they necessarily already had the market share. And then lastly, Peloton had already solved a big problem with getting out to a larger total addressable market by getting their bikes into every single household. But they didn't stop there. They invested in hiring some of the best athletic coaches out there who their memberships are very loyal to. They expanded into treadmill, they do boxing, they do yoga, they do weightlifting, they do meditation. I hear they're going to create a rowing machine. So they're basically expanding and making sure every consumer who wants it can invest in a home gym that's very cost effective based on how they're setting up. And they have a very loyal base with very low churn. And it's really was thriving when COVID really started because there's a lot of adoption to get into the online space for fitness. So again, if you package that story up, what does that really mean? Well, a hybrid model, it's not a tech thing, and it's not an industry specific thing. It's a customer thing. In layman's terms, a static model is going to be set up to run the standard course with no change based on the marketplace. A hybrid model is going to adapt based on consumer behavior and what's going out there so they can focus on consumers, solve their real problems, surprise them and delight them, and ultimately close more business.
Absolutely.
So let's pivot over to real estate. Who's today's buyer? And we kind of talked about this a little bit earlier, Brian, is the average age 45 years old. 37% of today's buyers are millennials. Gen Zs are growing right behind them in wanting to buy their first home. Younger buyers are more likely to move in a shorter time frame, and they look for their houses about 2 to 3 months for their window of search. On the other side of things, half of consumers are moving from a previous home that they owned and sold, and a good 68% of consumers are looking to finance through a mortgage. Now, the fine print that's not on this document is going with those millennial consumers and those mortgage first consumers that we talked about. These are consumers who are entering a very difficult market. Home prices are just going up. Cash offers are everywhere. Interest rates, unfortunately, are starting to go up, which is really putting a pinch on affordability. And these millennials and first-time homebuyers really haven't had the time to save up the equity for a down payment. So now more than ever, these mortgage-first consumers want to talk to a loan officer to figure out what they can afford and get out there shopping with confidence. So I should reference this earlier, is all this data comes from Zillow's 2021 Consumer Housing Trend Report. If anyone on this webinar would like to have access to it, I can send it out. I can walk through and answer any questions. But what this slide really illustrates is traditional banks, credit unions, financial institutions, major mid-market lenders still are kings of this space, right? 63% of consumers are still using distributor retail to find their loan officer. A growing segment, of course, is online lenders and consumer direct at a good 24%, but there is still a huge gap and a huge opportunity for distributor retail to adapt more towards a hybrid model and get online and grow their business. Now, on the bottom right-hand side, this is the moneymaker. I've been watching this trend evolve over the past few years. So at the top, where most consumers used to find their loan officer was a referral from an agent, right? Now this year, that's been overtaken. And more consumers are finding their loan officer online. And we find actually a good 29% of consumers want to get pre-qualified before even talking to an agent. So what does this really mean for loan officers? If you don't have a profile, if you're not investing in reviews, if you're not purchasing leads in your marketplace where you think you can convert at the highest level, you're missing out on that addressable market. Now, this is going to go more towards the home first consumer, just because I don't want to leave the real estate agents out, because this is a really interesting nuance and something that I hope most real estate agents could start adopting on their business model. 3D tours are the jam. Consumers love them, right? Good 59% of consumers are more likely to make an offer if there's a house that has a 3D tour versus a static image, right? They just both create more confidence. And the interesting piece here, it goes one step further. Once the consumer is going through the 3D tour and they see what that space potentially looks like for their family and their next move, a good 61% of consumers prefer to schedule an in-person tour online. So for the real estate agents on the call, two things. If you're able to put in 3D tours on your listings, please do. It'll help you grow your business. It'll streamline that transaction similar to how Starbucks streamlined their transaction. And you can take that to the next level by giving them the opportunity to schedule online for that in-person tour. Now, on the last slide that I have before I pass off to Brian is this is really the roadmap for your mortgage first consumer. They're going to browse thousands of listings on Zillow, Trulia, and other real estate websites, right? They're going to figure out what school district they're going to be in, a list of houses that they really like and what they hope they can afford. But again, they're going to hit a roadblock and they don't know what they can afford because they've never been through this process. And so that's what really sets up the loan officer to be the gatekeeper in this transaction and be the best mortgage calculator out there and help answer their questions and build credibility and help be their coach along the way. And then the consumer is going to go down the standard process, reach out to an agent. Agent is going to help them close in on the list of houses that the consumer found first, hopefully execute on that transaction on the house the consumer wants, and ultimately unlock that next stage of the home buying journey. And so again, before I pass this off to Brian, what I really encourage, these three things that people can take away from this segment on the webinar is: one, if you're not online, get online. Once you're online, get reviews. Once you have reviews, focus on trying to drive consumers to your profile. And the fastest way to do that is by leads in your local market. And we have teams of dedicated coaches to help you convert at the highest level possible. And Brian, I'll pass it over to you.
Absolutely. Thank you, Adam. And so it's a good point. I think, to kind of segment into kind of where we're going with this is to Adam's point, right? So behaviors change, right? So most buyers are online. And not only are they online, but they're expecting to work with people who are online as well. Right. And the systems and processes that you need for online are what? Clear web presence, clear channels for communication, clear ways of reaching out and responding. And then also, social proof, right? In the sense that you've had other people who've had success and that you can kind of piggyback on that. when I look at, the consumers that we run into and the leads that we manage, and kind of the best agents and the best agent teams, the best loan officers and best loan officer teams have all that in place, whether they have a retail presence or not. And most of them are running kind of a hybrid model, right? Where they're participating in leads in some capacity. And so maturing that, right, sort of going all in and saying, okay, this is where the market's going. Retail still has its play. However, without that online presence, you're really shooting yourself in the foot, because that's what people are looking for. They're looking for kind of a comprehensive, kind of online experience. So you want me to go through the slides on my thing and you just click it? That'd be easier.
I'll click it. You tell me when.
Okay. So to Adam's point, right, and this is not Zillow's research or anything. This is, Brian Coester's research, but a lot of this is backed up by a lot of very smart people. So 95% of consumers start online or researching online. Everyone's using their phone. Everyone's using the internet. And then the vast majority do not have a real estate agent or MLO. And I've seen statistics in the 50%. I've seen the statistics in the 90%. But the vast majority, about 80%, do not have that. So you see, you have somebody who's starting online. They're looking for a house. They don't have an LO or they don't have a realtor, and they're going to kind of get walked through this process, right? And to be honest with you, they have no idea what to even expect. So they're in a situation where, they don't know, like Zillow or Realtor.com or, Lending Tree. They don't have any idea what they're getting themselves into. They just submit the information and kind of hope for the best, whether they're going for a home tour or whether they're purchasing a house. And I always use the example, we do tours for buyers. A lot of times they think that they have to go through, let's say Redfin to get to Redfin houses, and Realtor.com to get to Realtor.com houses, and Zillow to get to Zillow houses. They don't understand that they can just contact an agent and that agent can help them get into every single house. But they're sort of confused, right? And then so when they expect this fully orchestrated experience, they don't have the team that they need to get the transaction done. And then they're using specific tools, right? And we can go to the next slide. And I'm kind of, they're using specific tools, right? So the lead aggregators are a part of that tool, right? So, Zillow is one of the lead aggregators. There's obviously a global marketplace of lead aggregators that are, kind of contributing to this marketplace of buyers searching online, right? Like we're working with buyers right now that are moving from Japan or moving from South America, and they're coming in the United States. They're using different websites and different portals to access. Now there's three key players in this space. You have the lead aggregators, right? You have the service providers, and then you have the clients. There's not, they're not one and the same, right? They're really distinctive. And I think a lot of people cross saying, okay, no. The lead aggregators don't have their place. They're trying to, steal my business, or no. I'm going to just stick local and stick to my sphere and just kind of keep within my box. And it's like, that's just not the reality of the marketplace, right? The reality of the marketplace is that, the lead people are going to the lead aggregators, and they're really good at that. And they're really good at capturing the buyer's attention and helping them walk them through the process and getting all the tour requests and providing all the service. And then there's service providers that ultimately are in the best position to do the work. And I always use the example, especially in the real estate sphere, with just the local programs. I mean, ultimately, it's very hard to compete on a national level against a local service provider who is familiar with the local programs, and you can come into the office. However, if you're not connected online to the millions and billions of people who are searching, and you don't have an online presence, and you're not taking that seriously, well, they're not even going to know you're there, and then you're not going to be able to provide the support. You want to go to the next slide? Yep. So from a lender marketplace, you see this already in the sense that consumer direct lenders understand that buyers, en masse need more support. And if you look at the example of Loan Depot with Mellow Home, Rocket Mortgage is kind of rebranded into more of a Rocket Home. New Day Financial, which is a big consumer direct company, has Homebuyer Connect. AnnieMac has AnnieMac Works. You have these companies that have dedicated real estate arms to facilitate this buyer experience, right? So, almost like if, the same way that Starbucks started to, take online orders to make sure that you can, capture that online business. Well, the real estate agent and the real estate transaction is a big part of this trend, right? So having a real estate arm or somebody to manage that buyer through the home purchase experience makes a big difference. Why? Because why? They ultimately want to get financing, figure out what they're qualified for, and then ultimately, secondly, go and tour properties, right? Well, if they've got to find, they don't have a loan officer or a real estate agent, and they've got to go find their own. Well, now you've just given them another task, right? Now you've just given them more work to do for something that they don't want. You can go next slide. And so what we see is that it really is a cooperative marketplace. So you have lead aggregators that are going after search traffic in two capacities, mortgage search traffic and real estate search traffic. Ultimately, it's the same end game, which is to purchase the property. And so whether you get a pre-qualification and then do the home tour, or whether you do the home tour and then get to pre-qualification, there's a lot of data around how that happens, and we're going to get into a little bit of that. But essentially, that's the game now that's being played in the real estate lead aggregation space, which represents almost all consumer search traffic when it relates to mortgages. I mean, there's not almost anybody who's not using their phone in that, right? So positioning yourself to say, okay, not only do we have lead aggregator relationships like, as a lender or as a real estate agent, investing in those relationships and treating them as partners, right? Treating companies like Zillow not as something, as a partner, right? To help you grow your business, whether it's on the mortgage search side, right? For financing inquiries, or real estate side inquiries, is getting an accurate view of what's coming, right? If you go online, you'll see a bajillion people, don't work with the lead aggregators, or don't do this, only work your sphere. They're wrong. I'm telling you, they're wrong. They're completely wrong. They're completely wrong. Work with the lead aggregators to grow your sphere is really the play. So you're working with a global marketplace that would want frictionless communication, but also an orchestrated experience. And there's just several milestones, right? So you've got home tours, you've got pre-approval and underwriting, you've got the contract and inspections, you've got the final approval, title settlement, and then sort of the final, relocating and moving. And they want to be sort of walk through that whole process. And next slide. And the main reason is just the length of time, right? So the purchase process is a timely process, and this is internal data that we have on leads that these are thousands of files that if you said, okay, well, what percentage of consumers who come in and say, hey, I want to buy a house, right? I want to buy a house, and what timeline did they do that, right? So this chart represents that. If you look at it, you can see almost in month one, almost nothing happens, right? So if you started working with a consumer now and you said, hey, you're interested in buying a house, yeah, cool, issue the pre-approval. If you issued 1,000 pre-approvals or 100 pre-approvals, almost none would close in that first 30 days. Month two, you start to see a little more action, right? Where you see some transactions starting to close, a smaller percentage of the ones. And then you look at months 3, 4, 5, 6 is when you really see the meat of when these deals start to close. Really, month 3, 4, and 5 is when you see the most transaction level. Well, that is one of the reasons why you need technology and an orchestrated experience and to be tracking this, right? Is because it is going to take multiple months. This is the reality of the marketplace. You have people that are moving and relocating from jobs. You have the home search process and home tours where people can only tour on the weekend or every other weekend. And it's not as rate sensitive or as a crunch as your refis. And so, for lenders who are on this call, and a lot of our lender partners have been, very busy with refis the last couple of years, they like those because they can close those in a month or two. It's real quick. You got some singularity of focus, singularity of purpose. You're in and out and you're done. However, refis, as everyone knows, are not really going to be the largest part of the transaction moving forward, right? They're going to be a smaller and smaller percentage of the business. And looking at purchases is it's a longer trajectory, right? So you're going to be managing it, and that's where a real estate agent is critical, right? Because without that realtor partner that you have a good relationship with, that 3-4 months go by, they've completely forgotten about you, right? Because they've gone on 5 or 6 home tours, they've gone out and talked to other people, and they're just on a whole different sphere. Next slide. Anything to add to that, Adam?
I think what's also interesting too is, I mean, we find that Zillow, a good half of our consumers on Zillow and Trulia are looking to buy or sell in the next 12 months. So this really overlays well to the stats you have as well, to where the sales process is relatively long. And I think it's also with what's going on with COVID and just what's going on with the real estate marketplace now, it's probably even longer. So like if you were to probably split test this over the next, say, 12 to 18 months, you would actually probably start seeing some green columns pop up in month 7, 8, 9, and 10, just because it's so competitive to get a house right now. And again, now more than ever, it's not only that the consumer gets in touch with the loan officer and the real estate agent, it's also both the real estate agent and the loan officer have their own follow-up cadence that they're able to maintain constant contact with this consumer, because it's not hard to find a real estate agent. It's not hard to find a loan officer. And these consumers are going to be talking to a lot of different people. And you want to minimize that risk of fallout and losing that business just because you were not staying in the appropriate amount of contact with this consumer.
That's a good point. It goes to kind of our next slide about who and what they're talking to and sort of the mind share, right? So this slide, real estate mind sharing position, explains sort of, how the consumer thinks of a real estate agent in their mind. And this was taken actually from 2 surveys that came out, one from Keller Williams and one from, I can't remember what company, but I have that information as far as how many lenders they're talking to, as well as how many agents they're talking to, right? So consumers just don't have one agent. It's not like the idea of like, hey, you're going to go out and you're going to submit a tour request, you're going to go online and find an agent, and this is the agent that you're going to talk to. You're going to get a broker agency agreement saying I'm representing you and this is just the way it's going to be. It's not the way it is, right? Consumers are not going to sign most of those until you're ready to make an offer or you're ready to rock and roll as far as the exclusivity. But they're also talking to multiple agents, right? That agent has a tremendous amount of influence on who they go with, right? As far as and I know there's a variety of statistics around the nature of it, but meaning like you have an agent who has relationships with lenders, they influence the real estate agents, they influence the decision on what lender they go with, and then you have multiple agents now in this mix, right? Saying like, okay, 3-4 agents they've done tours with, just on, going on Redfin, submitting a tour, going on Zillow, submitting a tour request, going on realtor.com, submitting a tour request. So they've gone out and talked to 3 or 4 agents. All of those are occupying a percentage of their mind space, right? Even if you're just the best retail agent, loan officer or lender or a real estate agent in the country and have the best reputation in the world, know and go to all the local stuff, your buyer's going online and submitting their information and getting sold out to another agent who's going to go and show that property and try to get that buyer to go with them, right? So that's the space you're competing against. Going and trying to replicate that yourself is not realistic, right? Going and saying, oh, I'm going to have them use my search app, or I'm going to have them go and they don't want to use your search app. They want to go on Zillow, right? However, having a presence on these websites and having a business model that can support this transaction in that way does give you a competitive advantage, meaning like dealing with reality. They don't want to use your self-branded search tool, right? They don't want to do that. They want to go on the main sites and they want to tell you, hey, this is the tour. And if you can facilitate that, you have a chance of taking their mind sharing position And it's the same thing on the lender side, right? So we talk about, and there's a whole bunch of statistics around the lender side, but having not only the agency products like FHA and VA and your standard stuff, but then having some specialty product, right? So for instance, having, the ability to deal with foreign nationals or different currencies or the down payment assistance programs and stuff like that, that gives you a tremendous advantage in the real estate space because everyone can do the agency products, right? And so it's like, if you're thinking about the mind share position of a real estate agent and the mind share position of a lender, well, what's going to give you the advantage? It's going to give you an advantage of saying, hey, we can give you tour requests. Any property you want, we can get access to. Me and my partner agent, are local, and we can knock it out of the park for you. Any property you want to see, let us know, and we'll get it done right away. And also, we have the best programs. We have all the down payment assistance programs. We have the agency products that you could want, and we can also discuss, any of the options that are available within the marketplace today. Now you're starting to have a conversation that they understand, because that's what they want. And that's something that we don't necessarily see as much, right? Like it's competitive, and it's competitive for a reason. And these consumers are shopping for a very specific reason because they're not being taught what to do. They're not being taught that this agent can provide any access. They're not being taught, these loan officers are not being taught, like, you need to have these down payment programs or these assistance programs. Like, I can tell you 35% of all our buyers have to know about the down payment programs, or they're just not going to do it. They think they heard from a friend, and they have to, or they're just going to keep shopping. They're going to keep looking. They're going to think something cheaper is better out there, and they're going to end up in the hands of somebody else. I have a couple questions. So, Adam, what would you recommend if you were a lender, and you work with lenders all the time? What would you recommend as far as trajectory in 2022 and moving forward, as far as with buyers and with lenders and the lead space?
I mean, I get this question, and I could actually re-articulate in a way where I was a loan officer for 7 years before I started here at Zillow. And I did a mix of distributed retail and also worked kind of the call center front. And then ultimately was fortunate enough to come to Zillow. If I were to get back into the mortgage space and to position myself for 2022 and beyond, I'd be focusing a good 70-30 model, right? So 70% of my model would be the standard model, building my relationship with real estate agents, financial advisors, insurance agents I did in the past to help grow my presence there. But also knowing that a good majority of my consumer base is going online before they talk to anybody, I'd make sure a good 30% of my business plan was online, so I can maximize that opportunity. Because if I don't get into that pool, which is growing, my competition is. They're already trying to get in there, and the longer they're in there, the better they're going to be able to iterate on best practices, on speed to lead, short-term follow-up, messaging along those lines. So, to answer your question, Brian, I'd still do what I was historically really good at, which is building relationships with other professionals, right? But I wouldn't hang my hat just on that. I'd also focus on my online presence, driving reviews, things along those lines. And the interesting nugget is consumers value reviews. And we actually found in a previous study to where consumers nowadays, especially millennials, value reviews just as valuable as a personal referral. So if my brother literally says, hey, Adam, you should go use this lawn care service, if I were to find that same lawn care service on my own with reviews, equal measure, right? So a huge opportunity there to grow your brand and take advantage of that opportunity.
Yeah, and so working, kind of piggybacking on that, right? So it's a little bit what we do at Real Estate Connection, and what we find is that lenders need to decide, and real estate agents, it's really just both, need to decide, like, hey, Sphere is not enough, right? And that regardless, the real estate agents that you're calling on, or the people that you're trying to get, especially on the real estate side, they're ultimately buying leads in some capacity, right? Whether that's consumer direct marketing via mailers for listings, whether that's, going and sponsoring the local, elementary school, ball and putting up the football team's, halftime show, or whether that's buying leads online or doing some sort of marketing service agreement to split it with another person or some sort of desk agreement relationship. I mean, ultimately, all of those are leads. It's just a matter of, are you building your database of leads versus building your teams or your real estate agent partners database leads? And then how sophisticated are you going to get, right? Meaning, are you just going to keep it like, hey, I have some local marketing service agreements with some agent teams, and that's how I get my business? Well, okay, that's fine. But at the same time, there's a lot of other people. There's a lot of other people that are, trying to go after those same agents and those agent teams. When you look at one ways of doing it is saying, hey, we're going to go out and just purchase leads. We're going to go and work with the lead aggregators. And then we're going to have just an influx of buyers to work, to send out to those agent teams. So we're not relying on them to send us business. We have a copy of the record. We have a copy of the lead. It's exclusive to us. And now we're in control of the business. But to your point, hybrid. So both.
Yeah.
Right. Not necessarily your foot all the way in the lead space, because there's value in partnering with the real estate agents, but not necessarily 100% in the real estate space as well, because there's value in being more independent.
Yep.
So cool. And then I want to just touch base a little bit. I know you have a variety of programs available at Zillow that, lenders can plug into and stuff. Maybe just give a little, what programs you guys have for lenders and that, a little overview of that.
Yeah. So the lead that I primarily sell, it's called Zillow Connect. And essentially what it is it's consumers who come to Zillow, come to Trulia, they're looking on the home details page and they see all the pretty pictures, they see the neighborhood, they love it, but they see the estimated monthly cost of that house, and they don't know if they can afford that. So really, you get a lot of mortgage first consumers who are primarily first time home buyers, who primarily are yet to talk to an agent, come through this funnel. And the consumer doesn't just click a link, put in their contact information, then the lead is sent over to the loan officer. We actually put the consumer through a 15-page funnel where we ask a lot of the same qualifying questions that loan officers typically ask over the phone, on top of, are they working with the agent? Are they a first-time home buyer? What's their timeline? So a loan officer gets a ton of data from this consumer in their CRM before they even talk to them, so they can start building that conversation and that talk track. Now, one of the questions, I think we got exclusivity for our leads. I'm going to say there's really no lead out there that's exclusive. If someone says, hey, we have 100% exclusive lead, then I don't know how that works, because consumers have access to multiple lead aggregators, multiple search engines. They're really out there anxious to shop. They're going to go through multiple setups to find their answer. What I will say that we do that's a little bit different is when the consumer clicks submit and they provide their contact information, we send that out to an initial lender, and it's that lender's responsibility to follow up how they see fit. We do follow up with a list of additional lenders. If the consumer wants to have multiple lenders contact them, it's 100% up to the consumer choice. So again, at Zillow, one big thing that drives a lot of our traffic is we're focused on the consumer choice or consumer experience and cool tools and things along those lines. So hopefully that answers that consumer's question, that it's not necessarily an exclusive lead, but keep in mind, more times than not, the consumer wants to talk to a highly rated lender versus lenders is how I like to phrase it.